July. I'd just like to start with just a mention of Shinzo Abe, the longest-serving prime minister in Japan. His Abenomics, as it was known, his 3 arrows of Abenomics, didn't really work. Didn't really move the Japanese economy out of its long-term slumber. But an absolute, very astute politician, and he wouldn't have stayed as prime minister in Japan for that length of time if he wasn't astute and well regarded on the global. All to all and colleagues in Japan, commiserations, and may he rest in peace. Today, obviously, key non-farm payroll number today. Really, market. Remember, we've already had 75 basis points from the Fed. They're already off and running in June. July meetings expected currently to go with the 75 basis points again. Some chatter, remember, of a whole number rise. That seems to have dimmed in the last few days. We've had a rally in stock markets, 4 days consecutive up for the S&P 500. So it's holding over that key 3,800 level and just spiked through 3,900 yesterday on close. But it's difficult to tell whether this is still is this another bear market rally or a simple short squeeze. But we're still quite significantly below the 50-day and even the 20-day moving average as well. Although we actually moved over the 20-day moving average technically yesterday. Good afternoon, Rana Trumpet. Good afternoon. Hope you're well. And we'll look at Swissy and the Aussie, no problem. Aussie Swiss. Actually, I'm sure I've got my charts, but we'll have a look at those as we go through. But I say non-farm payroll. The average from Reuters was around 270,000 on their poll, 265,000 on the poll from the Bloomberg poll. Obviously, a big. Quite a narrow range this month. Last month we were at 390,000 and 436,000 the month before that. So down under 300,000 likely today. Action Economics, people we follow quite closely here at hfm.com, they're talking about a 310,000 rate rise. Most analysts and economists are pretty sanguine about the unemployment rate staying down at the 3.6%, so that's staying stable. Hours worked, 34.6 hours, and the earnings, key earnings. Remember, we were up at 0.5 of 1% in March. We come down to 3.3% last month, and 0.3% is expected again today. So earnings have been hot. They're cooling a wee bit. They're still hot. That still gives us an annualized rate of 5.2% down from the high of 5.5%. So we saw that squeeze on jobs yesterday. Jobs markets come down, but it's still over 11. That's people leaving jobs and job vacancies. So for every for every unemployed person in the US now, 1.9 jobs out there. So there's no reason people can't take these jobs other than the fact they're not qualified. Or they don't want them. And that's the conundrum policymakers have at the moment. So let's see how that pans out. Still 5 minutes away. So Trumpet is saying, let's have a look what you're all saying. We'll come and have a look at the charts in a minute. Dollar sell. The dollar's very, very strong. Obviously, it's been a key week, as I've mentioned about with regret, Shinzo Abe's passing. But obviously, also, we've had the resignation of the Prime Minister in the United Kingdom. So, I was looking at all sell pairs down, gold, euro, yeah, lots and lots of pressure. Any signal on gold? Gold's pretty flat. In fact, it's moving down. We'll have a look at the charts. Let's have a quick run through some of these for you before we get the numbers. First up was actually Rana, who's asking about the Swissy. So Swissy, let's have a look at the Swissy before the numbers come across the board. Let me share the screen first. I'm just get rid of me a wee bit. This is dollar index. You see the dollar. This is on the hour chart, guys. This is the intraday. But if we go to the daily chart, you can see here big rally. 107, 106.88 is where we trade at the moment. 107 was breached this week. And there's no let up in the strength of the dollar. It's outside the Bollinger Band again. It's been outside a few times on this rally rally up, so maybe but clearly resistance at 7. But remember, that's a 20-year high. So dollar at 20-year high, 24-year high against the dollar, against the yen. Obviously, the yen strengthened today. It's the best performing currency on the back of the tragic news from Japan today. The trends keep going. Don't fight the trend. So dollar up. So first up was Rana asking about the Swissy. So let me just find Swissy down here somewhere. Swiss franc here on the day. Here on this is the daily range, Rana. You see, this is parity all the way up here, 100, and a floor here during May, June. It's down here at 96.50, 90. So we're literally more or less halfway between that now. The blue line here is the 50-day moving average. The Bollinger Bands measure a two standard deviation variance from the average, which is the 20-day moving average, which is the green line down here. I'll chuck my phone away. It's hanging in my ear, which is not nice. And the gold line down here is the 200-day moving average. You can see it's relatively it's been volatile. At the moment, we're on bid. The dollar's bid. We're into 1, 2, 3, 4, 5, 6 days. We're over the 50-day moving average. So on a day basis, we're over the 20-day moving average on Wednesday. We're over the 50-day moving average at the moment. We don't know what to do on today's candle because it's not okay. So daily is bid. 4-hour will be also bid. This is a 4-hour over the 50 in the top half of its Bollinger Band over its 200 period moving average on the 4-hour. So that's well bid as well, and the 4-hour will be similarly bid as well. So there's the 200-hour moving average. There's a 50-hour moving average. Now the green line, the midline in the Bollinger Band there is the 20-hour moving average. So you can see a strong bid. We've had a big snap in or squeeze in the Bollinger Bands here, and then a big hour here at 10 o'clock this morning server time, and we've retraced from that. So we've had up today to 97.75 when we ran out of steam on the hour basis. Into hour we got as high as where do we get up to 97.96. So they're two areas to look at post non-farm payroll. Support immediately. This one right here at 97.43, and then the 50-hour sits here at 97.24.25. They're the 3-4 lines you want to be looking at on the payroll data later on. Aussie Swiss too late because I'm not here to be honest, so we'll have a look at that. Anyway, let's just hold that for now. Let's just come back to all the things you want to have a look at. We'll run through the majors before the break comes out. This is the euro on the daily time frame. What a big move down here. This is 105, 103. And the black line here is 101. If it's marked correctly. Let me just check that. It should be 101 exactly. So we're under that today. So last time we traded under 102 was December 20. So we're at 20-year low here for the dollar, 1 hour. Here we are being tested, so that's pressured as well. You can see what a big rally move down we've had on euro. Same with yen, except the other way around. We got a swamp move, 136 again, and the data is just coming out. Let's just cut from that. Let me have a look at the data as it comes across the terminals here. I'm on a slow terminal here, so I apologise. I'm not on my normal workstation today. So the data's just tripping across. Where have I lost it? So, what have we got? Unemployment rate remains flat. U6 has actually tipped up, which is interesting. The headline is coming at 372. 372. So it's a hot headline. For non-farm payroll. Average hourly earnings is ticked up on an annualized basis to 5.1%. It was expected to lay flat at 5%. The monthly remains flat at 0.3%, but the last month has been upgraded to 0.4%. So this is a hot end of the it's at the hot end of the number. So the headlines beat, Earnings per month is in line. The annualized earnings has gone up to 5.1%. So this is at the hot end. What does that mean? Well, it means that the Fed will remain on its tightening cycle. So it's probably cements the 75 basis points for the meeting at the end of July, and possibly 50 basis points in September, and not until November, December will start easing off to 25 basis points. But the hike cycle is certainly in, and if we see the reaction, one would expect a stronger dollar indeed. Here, this is the euro here in the 5-minute chart. Let's see their immediate reaction. Emission is down. It's a stronger dollar. The headline is better. The detail is rather better as well. Obviously, analysts, economists will go off and squeeze and have a look at the banks, but that's a stronger dollar number. So euro dollar, that's the parity level. This is 101 here, the black line here, but parity, 1 for euro dollar to 1 euro for $1 is very much in play. We trade at 101.25. That's a line number out of Washington today. So dollars up. That's the euro on the 5 minute. Let's go back to at least the 5-minute chart. You see it moving down. Now the chart it's starting to tick lower. Yen will be up, testing 137. One would assume. Let's assume it's yen on the daily. There we go. 136. We've breached on that data. Sterling will be back under 120 certainly. On that number, we tried at 119. It's been a relatively good morning sterling, but we're down at 119.90 now, back under 120. So, yeah, it's a strong dollar. I would say that's a strong, focused result. The impact would be future. I would expect equity futures to have weakened a tad on that announcement. Yeah, there we go. Equities down. So it's pressure on equities supported. And let's see how gold's reacted. Gold should have also slipped on that immediate news. There we are. Gold down at 17.36. So let's just go through everything as you would like us to have a look at them. We'll start with gold. I know a lot of you are big gold buffs, but that's the gold on the 15-minute chart. If we look at the daily chart, you can see here. This is the mid. Let me zoom up. You can see here we've been in this under half of the Bollinger Bands for 15, 16 days now. There's a big down day here on the 13th of June, and we haven't recovered. So big down day, bit of a recovery, and then we've just all the way down into the end of June and July itself with 2 big down days a week as well. We currently trade at 17.37. Big support. Our next support is 17.25 on an end of day basis for you gold traders. That takes us all the way back. I'll zoom this in. That takes us all the way back last year. This drop down here, we'd had a big move down here from the beginning of September when we were sort of pushing over. Purple line here is 1800. So we're around 1825. Couldn't get to 1850 here. And then it declined all of September to this low at 1725. So that's our next key low, and you can see here on the chart how close that is now. So 1725 and then 1700 itself. So gold pressure from a stronger dollar and a stronger yield market as well. Remember, gold is non-yielding. It's obviously on its plus side. It's seen for inflation, but it's not had any of that lift. So gold under. Trumpet is asking about trumpets. Okay, so just to bear with me today, there's lots going on, guys. Okay, so sterling, let's have a look at sterling. I said earlier, weaker. This is sterling on the 5-minute chart. Well, let's have a look at more really hour chart. The line here, we're back to 120 actually, interestingly. Sterling's come back up. Obviously, sterling this week has been, I suppose it hasn't been influenced, but obviously the minister resigning in any country is quite significant. Boris Johnson had to resign yesterday after scandal after finally being caught out, lying to the public and Parliament. But actually, technically, wasn't lying to Parliament. But anyway, it's not for another day. Sterling 120 is absolutely key here on any sterling cable chart. And back to that level at the moment, just actually reaching up. Interesting, able to come back, sterling to come back against the dollar. That's the 50-day moving average at 119, 119.66. Day is here at over 120. So 120 is very, very key. Intraday, Trump, I don't know how you're trading this, but certainly interesting. It went down, it's come back up on the data. So perhaps something in that data that's perhaps not as strong as. Let me just have a quick run through the data again. It's difficult to do it live. Participation rate was in line, earnings was in line, unemployment rate was in line. So we had a hotter earnings, we had a hotter U6, which is okay. So it's perhaps the that higher unemployment coming down, so that's pressured. 372 was the headline. So yeah, we'll come to the Canadian dollar in a minute because they've had their jobs numbers as well. Their unemployment rates come down. Their net change is much worse, though. So Dollar-cad will be quite a significant mover today as well, one might expect. So interestingly, might be some political news again in the UK that's lifted sterling, and players are using the non-farm payroll data as a way of playing that, but still looks. I'd say that was it's a stronger dollar number, and sterling here is down back under the 120 level. But 120 is key as we go forward. Trumpet sound myself, my friend. This is the 5-minute chart. Obviously back in there. Let's go up to the more tradable time. It's a 15-minute. Again, up and down there. A nice big wick at the top there of this rally up. So a bit of a shooting start at the top of this 15-minute rally, and we come back down now under that. So that's 50 minutes short, and the 1 hour bouncing up, but 1 hour has resistance at the 20-hour moving average there, which is above the key psychological 120 at 120.05. So that zone providing resistance. So is the 50-hour there at 119.67. Trumpet, my friend. Right, let's get. There's a lot of your questions in here, so let me have a quick look at that. Yeah. So where was Amir Khan? Is it Amir Khan from the Caribbean? I'm not sure it's the same person, but sell what? Sell dollar. Well, it's not happened to me. Sell down gold, euro, and pound. Well, they're definitely all in big down legs. Euro down on that number. It was up. Now it's sort of weakening, obviously, but we're at very, very weak levels under 101 earlier today. So it remains very weak in the higher time frames. Gold weak and euro weak. You're absolutely right. Sorry, excuse me, Jane. Any signal on gold? Well, gold, as we just said, is weak. The daily trend is down. The 4-hour trend is down. It's finding some support here at 1738 at the moment. The 1-hour trend is down, but it's again, all of yesterday we pivoted through this 1742 level, which I mentioned in this morning's market talk, and it's sort of got a bit peak, as you might expect in the non-farm payroll data, but we've spiked to 1733 today, so that's our real support today, 17.3 intraday for ARNA, but certainly 17.25 on an end of day basis is a big support level as well. So sideways congestion at the moment, waiting to break out. So our resistance today is that 50-hour moving average at 17.43.30. Top of the Bollinger Band's a bit above that at 17.44.86. This is the 1-hour time, and the floor of the Bollinger Band sits around about 17.36, and we've been as low as 17.33. So quite a tight range for gold. Hasn't moved much in the non-farm payroll data, so the fundamentals remain pressured to the downside for gold. Femi, my friend. Sell. Amir, yeah, it's looking that way. It's not moved a lot today, but certainly it's pressured to the downside. Many got MC. I don't know what that means. Amir, it's don't use indicator professional. Don't. I don't know how long you've been trading, my friend, but yeah, whatever, Amir, and that goes for everybody. Whatever system you have, it doesn't matter. There isn't a right or wrong system, there isn't a right or wrong indicator. What works for you, if it's pure price action, if you're trading as a scalper or you're trading as a monthly swing trader, long-term trend trader, it doesn't matter. Use something that works for you. I've always used Bollinger Bands. I've always used moving averages. They work for me. I accept my losses, I bag my winners, and I get up and fight another day. And that's what trading is all about, my friend. So whatever works for you, um, keep going, my friend, and the very best of luck. Before gold sell, after we'll buy. Well, see again. I don't know how long you're holding these for, but gold, Amir, is very much in a downtrend, as I said earlier. Has gold? That's an interesting question. Has gold been oversold? Well, let's have a look. What are the indicators that Amir is saying he's not a great fan of? Or she? I'm assuming it's he. Sorry, she. A great fan of. So RSI here. This is the gold chart. Again, let's go back to the daily. The gold chart. The MACD here. The histogram and the signal line. Sort of not biased to the downside, but it's only started to open up this month as we've had these big candles. So, just analysis. The big candles are down candles. That's a big down on the 13th of June. We had a couple of up days afterwards, but we did send it the big down day, and we went down again, and we're in the under half of the Bollinger Band again. So we were moving lower, and then we've gone down quite slowly. But then a huge day here this week on the 5th, and then another big day here on Wednesday following immediately. So the RSI set at 14 says yes, it is. So we're in the oversold area at 25.61 on RSI. The MACD histogram, signal line is still moving down, and the histogram is beyond the signal. So there's a difference between the two moving averages, but that's still that can still move down. Remember, there's no boundaries on that. That can just keep going lower and lower. So there's now argument of it being oversold. If we added another indicator, I don't know, something like the MFI or I don't know, some other oscillator. I don't know. Let's pick one. Williams percentage R. Yeah, there we go. Just for a change. This is oversold as well, percentage R. So we're in the oversold area on percentage R, but we've gone low. We've spiked up. It's still oversold, but it hasn't come out of that area yet. So the trend remains to the downside. So it may be, but the fundamentals are stacked up against gold at the moment. The stronger dollar, the more aggressive Fed, but that obviously isn't going to go on forever. Inflation at highs, that should rise demand for gold. We haven't seen that. It might be the story of inflation topping out, so the Fed might then start to take their foot off the pedal a wee bit, but there's no sign of that, and certainly no sign of that from the non-farm payroll data we just had today. So that's still, some indicators are saying it's oversold, but at the moment the trend remains to the downside, and I wouldn't necessarily be. There's nothing there to say buy to me. It's the 1725 area is calling out. I'd say there on that daily time frame. Thinking myself. Hello, Dollar-cad. Yeah, interesting. Obviously, because we've had a weakish Canadian jobs data today as well. So this is Dollar-cad on the 1 hour. You can see what a big spike we've had in this current hour. The Canadian data, which came out at the same time as the non-farm payroll data, quite often gets overlooked. Unemployment rate fell significantly. It's come in at 4.9%, and it was 5.1% last time. So that's quite a two-tick move in unemployment. It's quite significant. Wages, again, though, very hot, 5.57% from 4.45% last time. But the net change on employment was negative, 43,000 negative. So that's a headline negative number for the Canadian jobs economy. And again, another suggestion that people are leaving the jobs market, the participation rate down to 64.9%. So unemployment rates come down because there's less people in the market. So it's one of those conundrums. Obviously, Canadian dollar is very susceptible to the move in the oil market. We've had some significant moves this week in the oil market as well. But here on an end of day basis, sorry, it's an hour basis, not a daily basis. On an end of day basis, very much the dollar bid against the Canadian dollar. So we've been banging up here into 130, and we're actually over 130. Just put 130 on there. That's the 130 level. This black line here, I should change the colour of that. Okay, list. Not object list. Go forward. Change that to a blue because it's the same colour as that. 30. Back over that today, and we've been in the upper half of the Bollinger Band here since early June as well. So this line here, let's change those vertical lines as well. So it's still yellow. You can see those, can't we? Can't really see that either. Make it a darker colour. There we are. You can see that pink line. So again, it's been bid really from the middle of June into 130, retraced, but supported by the 20-day moving average. The 20-day moving average there has crossed the 50-day moving average, the blue line here. That's the 200-day moving average. So they're all in alignment now. 200, 50, 20. Big up day here earlier this week through 130. So 130 needs to hold, and we currently trade at 130.26 on the back of that non-farm payroll data. So an RSI 60, still got some legs up on that. So that's bid Dollar-cad. My friend, hello. Amir, good bro, no problem, my friend. Good morning, Farzam. How the devil are you, my friend? I hope you're well. I've spoke to you for a long time. Hope you're well. Stay safe. Dollar-cad is saying buy now. I mean, yeah, again, it's bid. That's the 1 day. The 4 hour is back over. It's 20. Yeah, that's, I don't know. What time frames do you trade in, or are you just in and out on candles analysis? I'd like to know. But that's up 4 hour. Is also bid. It's not great. We're strong. Support the 20 hour over the 50 hour and at the top of the Bollinger Band. So yeah, 130.29. Yesterday we got as high as 130.75. So 130.77, 130.75 is the next upside from Wednesday and Tuesday. No, that's not right, is it? Yeah, Wednesday and Tuesday. If we're going to run further to the upside, come here, Amir. On trade running in profit of gold, very good. Again, I trade this, my friend. Bitcoin, Isaac, Bitcoin up to date, please. Well, Bitcoin had a bit of a breakout yesterday. We've been pivoting through 20,000. There's been not a lot of action going on at all for a long time. But this is the daily on Bitcoin. You see, it's still very much looping lower. So we pivoted around 40,000. We pivoted around 30,000 most of May and half of June. We then legged lower, didn't we? I'm sure you're aware that the machinations, and now we've been pivoting through 20,000 again. So, like any asset, you know, the longer it consolidates, the breakout can be quite significant when it comes. As you can see, the Bollinger Band squeeze here. So we squeeze and then we leg down. We're currently, you know, in another squeeze going on here. So is this squeeze? Is this another bounce up as we move forward? So that's not. I get that. There we go. That's a great use of the Bollinger Band squeeze. Bollinger squeeze, showing it's quite a so squeeze on the Bollinger Band. Remember, is when the top line comes in and the bottom line goes up. Top line comes in, bottom line goes up. What is that? Remember what it is. It's two standard deviations from the average. So we come back to a consolidate, and then there's a big release of tension, a big release of pressure as now. So big gap down here on our charts here. Back on the 10th of June weekend, big selling, big gap down here on Monday, and that caused that big expansion of the Bollinger Bands again. And then we're down into 20,000, and we've been as low as something like 18,600, haven't we? However, yesterday, in a big downtrend, we spiked over the average for the first time in a while. Why is the scale a bit onto there? We had a strong day yesterday. We've had a relatively strong start to July for Bitcoin and other cryptos, as we have had with the equity markets. Although muted size candles, not huge, but that's a relatively decent size move yet when we closed around 21,400, which is where we are now. So we've, you could argue 10% above the 20,000, isn't it? 2,000 is 10% above that 20,000 pivot. So it's looking a possible move up, but we've had that before, haven't we? So we'll see. It needs to break higher. So this is support 20,000, the 20-day moving average 20,700, and first resistance would be that 50-day moving average, which is at 27,000. So it's a good week. The 4 hour is positive outside of it, but at the moment spiked to 20,400. That's what I thought we'd said. I'd said 22,500 earlier today, and now we've come back down a wee bit. So that's our first target today, again to the upside. 1 hour, that 22,000 earlier this morning in the Asian session. Now we've drifted. We've come under into the side of the Bollinger Bands, but they're still pushing up, but come down to cool again here on the 1 hour. See how they've come in, haven't squeezed in, but they're coming in quite flat at the moment, and we're back under the 20-hour moving average for Bitcoin. So today, support sits at 21,000, which is interesting. We trade at 21,300, and the 50-hour 20,800, and the 200 at 20,100. So interestingly, the 200 moving average now is sitting north of the 20,000 cycle level, so it's relatively well bid Bitcoin today. Isaac, did you ask for that twice, Isaac? You did. I've got your question in here. Right, let me just check. I'm not sure I'm getting any Facebook questions here. I'm going to go. Yeah, you're all on YouTube. Let me just check if there's anybody on Facebook. It doesn't look like it, does it? I'm watching myself. That's very weird. So my internet connection's has gone. No, I can't see any comments on Facebook. I'm going to close that. Leave this open. Where am I? Whoops. Oh, I didn't mean to do that, did I? What am I doing? I'm trying to see myself. Right. No idea. Bitcoin actually, that's a crypto bet. It certainly is. Your indicators. You're talking about the indicators on the chart, Amir. This is the Bollinger Band set at 2 standard deviation, the green line. The blue line is the 50 simple moving average, and the golden line is a 200 simple moving average. We got the ATR, one of my favorite indicators below the chart, the average true range. It is what it is. It's an absolute. I love the ATR. Great for setting targets, great for setting stop losses. Multiples of the ATR can be used to set targets. The MACD, default setting again, the 12, 26, and 9. One of the best, longest, not best, but, it's got a long history. It's been around a long time. Histograms were added to it. I've used it for a long time as well. And then the RSI, either set 14 or 7. This happens to be set 7. And there we are at 7 for the RSI. And that's sort of dipping down here on this Bitcoin on the 1 hour time frame. Yep, no problem. That's what I'm here for. You're absolutely right. Yep, strong dollar is bid. The data has supported that. The fundamentals support the strong dollar. I don't know where you guys are, or wherever you are in the world, but the emerging market currencies are very much under the cosh as well. I was looking at the Rand yesterday, South African Rand. I haven't actually got that. Actually, let's have a new chart. Euro, where's it gone? Dollar, Rand. Where is it? There it is. That didn't work. Why did that one? New chart. Forex. New template, which is I've called it Live 22. These are all my different templates. But see, 17 might have actually been hit today for the just shy 16.95. The before non-farm payroll come down a wee bit, but certainly if we look at the daily time frame, the dollar is bid, and this is the same against all the emerging market currencies. All the emerging markets suffering from a stronger or suffering from a strong dollar, as well as all the other impact of high inflation and the war in Ukraine, the invasion, completely unnecessary invasion by Russia into Ukraine. So emerging markets very much under pressure. So 17 is very much calling for the rand. I know nobody asked about the rand, but I just I'd be looking at that the day, didn't I? So Dollar-cad, I think somebody's just asked for, and that's income. Usman, hello. How are you doing? Hope you're well. So it's kept its bid. We looked at this a few minutes ago. It's over 130. Well, let me put 130. There it is. 130 or 3. So they're 130. It's over its 50-hour moving average as well. We trade at 30.15. So that's bid. The 4-hour chart has come down, but it's bid 130. Target would be 130.75. That high from this week. Big strong 3 candles and 4-hour cooled. But looking to run up and break over. We're over the 20 period moving average. We're still in the upper half of the Bollinger Band again, gone under and tested it, and come back to upside with that combination of strong US data and weak Canadian data. Moving that. Tumlo, hello sir. Can you please release other webinar related how to handle global recession? Certainly. Let me put a note on that. So it's fundamental one on global recession. Yeah. Whether it will come or not, what does it mean? Technical recessions are probably going to happen, but how does it impact the markets? How does it impact public people, ordinary people around the world? Certainly, strong dollar, as I said before, impacts emerging markets disproportionately, unfortunately, because we buy all our, I'm saying not we, I mean the world buys all its goods in dollars. They import oil and wheat and whatever it is, pork bellies, orange juice. It's all priced in dollars. So a strong dollar has a massive impact on trade and a country's ability to pay. Because I'm starting to lose in trades because of this global recession, Russian, Ukraine, and also China, Taiwan. Absolutely, the Russian there's the sentiment in markets as well, Taluma. There's the fundamentals, which is what the actual data shows us, how companies are performing, how countries are performing, how currencies are performing, how commodities are performing. And then there's the sentiment. The sentiment is often driven by the economics, driven by the politics as well as the economics. So obviously the politics between Russia and Ukraine is broken down. There's a war going on. Russia, a much bigger, a more aggressive neighbour, has invaded Ukraine. Putin doesn't register or accept the existence of Ukraine. They're occupying 20%. Lots of people have died, unfortunately, on both sides. But that's a big political headache for the world. NATO, Europe, Russia itself. And then obviously the issue with China and Taiwan is very, very, very similar. The US said they will defend Taiwan as a separate nation. China doesn't recognize Taiwan as a separate nation. Blah, blah, blah. Same old story. We've got autocrats in charge. Putin and certainly Xi Jinping can go. Well, Xi Jinping can certainly go on for as long as he wants. Putin's already been there for 20 odd years and keeps changing the rules to keep in power and restrict media comments. China's a communist state. Don't forget that. They've accepted free markets to an extent, but it's still a communist state. So these all have big political issues, and the markets play out in them. But certainly, tomorrow we can do something like that. I'm from Facebook, been there since LOL, where we were beginning. Neglected, jokes aside. Hello, everyone. Can get silver and Aussie dollar 1 hour and weekly, please. Cooper, certainly, my friend. I haven't seen you for a long time. Sorry, I did go to Facebook. I couldn't see anybody there. Let me just check again. Why is that? Facebook messing us about. Cooper, I can see your comments. Yes, you're coming to YouTube. I've just seen it now. 36 minutes ago. Cooper, I apologise, my friend. I hope you're well. So this is the sort of thing that makes it easy for me to do some analysis, guys, when people put on their actual time frame. So Cooper's asked for silver and the Aussie on the 1 hour and the weekly. I know Cooper asked about that. So what's first up on my list here. Aussie is the first. So weekly and 1 hour. So Aussie on the daily is in a downtrend. 200 day, 50 day, 20 day. It's under half the Bollinger Band. We're down here from this high at the beginning of June. We got to 72, 73, and it's just down. It's down, retraced down in a down leg now, and we currently trade at 68.50. So that's the daily. So above that in the weekly will be weak, Cooper. So weekly remains weak. We're pushing new multi-year high, multi-year low. So last week, all the way down here, we haven't been as low as this since May 2020. Whatever that is, that's 102. So over 2 years, 108 weeks, and you saw what a big, strong week that one was there. That's in the weekly. What a big, strong week that was, and we're down at. I can see that. So that's where we were closed last Friday. This week from May 2020, and that was a big, strong week. The final week of May 2020, the panic over the COVID-19 was easing, and Aussie rallied against up to the dollar. We went all the way to just shy of 80, didn't we? Or did we get over? I can't remember now. Yeah, we got to 80, didn't we? Here at the beginning of February 2021. And since then, though, it's really been a downtrend, hasn't it? So down here, up, down, up. So it's been going down. So we're still in a downtrend. So you'd argue. So where's the next level? So let me move that back. So we're here at 68.15 on the weekly. Next level. The next support is the bottom of that week. That key strong week here from 2020. So support on the weekly there, Cooper sits at 66.50. 66.50. So 66.50 is your next weekly bottom. As you can see here, it doesn't look that far away on the current chart, does it? On this weekly chart. So big weekly spot, 66.50 for the Aussie against the dollar. Remember the RBA writ late, and they're on a sixpence really when it comes to increasing rates. Some relatively strong data out of Australia over the last few weeks, but as far as the Australian dollar against the US dollar is concerned, it's been down for 1, 2, 3, 4. We're into our 5th week down, and of those 5 weeks, 3 have been big down weeks and 1's been an up week. We're up this week so far, but that's our big support, 66.50. All the way down to your other time frame, Cooper, on the 1 hour time frame. It's had a relatively bouncy week, the Aussie. It's been some more. It's been the best performer overnight. So on the 1 hour time frame, this morning we went over our 200 hour. We had classic tweezer top there. We had a nice rally up all of yesterday. We topped out this morning up here. Tweezer top, short, signalled at 68.60 was the top. Short at the end of that candle there, and broken the 20-day average. Then it's moved down, found support at the 50-day moving average. Bounced off that resistance now at the 20-hour moving average. A big down candle on the non-payroll day. So it's down again, and it's punched a new low for today at 60. So under 68 intraday, 68.68. Sits around about there. We went under that, but not very long. Came back. So 60 support now, and our 2 resistance levels. So there's one here where we are now, 68.15 on the 1 hour frame. Next one is the 20-hour moving average at 68.30, and then the 200 hour there at 68.50, 68.48. So there's your resistance there, David. That's bar to the downside on a 1 hour basis. Let's do the same thing for your other request, which was silver. And I was just looking at this. Again, silver's had a weak week, along with a lot of other commodities. But most interestingly, this is still weekly, Cooper. And again, you see we broke last week. I'm sure you know this if you're weekly. It broke the 200-week moving average last week close. So it's been weak since April. That's the 17th of April week, that for silver. Topped out at 27, couldn't get over 27. Sorry, couldn't get over 26. It's 25.75. And it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 13 weeks down, 11 of those to the downside. Today is complete. Oh, this week is late, but the big breach was certainly the breach down there. So again, the question is, well, where do we look to the left? Where's the next support? Well, you can see exactly where we are now. It's that week there. That's back to 2020. This is summer 2021. It was running quite quickly. So where we are now is key support. Hang on, is that the right level? Yeah, we are now. Where we are now, 1915 or 19 itself is the key support as we go forward. And that breaches, you see, 1960 between and it drifted down, didn't it? Here, you can see it drifting down here, and that took it down here. At that point, that was the 200-day. That was a positive. That was a bullish sign there. Wasn't it? 200 weekly. That was bullish. A few weeks to get going, but very weak weeks during the spring, late spring of 2020. But that's weak. Going back to your, so the weekly is weak. The 1 hour, that's that key weekly support here at 1901 that we put in. So again today, it's under its 50 and under its 20-hour moving average. 20 across the 50, pretty flat, but downside I would say 2001 being support on the 1 hour time frame. My friend, sorry, you had to wait over half an hour. I don't understand that. Domello. I've been doing good. Find out yourself. And I found a very interesting part talking about the institutional traders saying they are better than retail traders. I want more information regarding that. Yes, of course, institutional traders are better or more informed than retail traders. I would argue they're not necessarily better, but they're professionals. They get paid by their bank or their institution to actually trade. So they should have some sort of track record. If you want to be an institutional trader, get a good retail trader record. The beauty of a retail trader is you're trading with your own money. So you've got real skin in the game. Institutional traders are obviously trading with jobs are on the line quite often, but they're trading with institutional money. So it takes a bit of an element of risk out, not to take an element of risk out of it, but it takes an element of skin in the game out of it, Timo. So certainly, get good, get consistent. It's all about consistency in trading, and that's by far the most important thing. So. And have a system and trade the time frame that fits you. You can't always do that as an institutional trader. You have to trade every day. Again, it depends what desk you're on. You have to have big positions for a long time. All sorts of different ways of trading as institutional traders, but they got to have money in the game, and it's clients' money, not necessarily their own money in the game. Sorry, I just put my up there. So yeah, if it's something you're interested in, just work on it, and the best of luck, my friends. All the questions gone. That's jolly interesting. So it's only all gone in half an hour. It's only right. No more questions. That's interesting. I obviously bored everybody. So let me just go back to. There's no one on. No, there's no one on Facebook. There's no one else. And that was the last request from YouTube. Well, I might be able to finish up today. Have I covered everybody's questions? Anybody got something new that we haven't looked at yet? So let's just wrap it up then for the day. Let's just do a quick recap for non-farm payroll. The data was better than expected. Let me just run through the numbers again. The data was better than expected. Actually, let me see if I can share. No. There you go. All right, I can get my calendar. There we go. See the calendar, can't you? So I was just going to run through the day rather than me just rattling through it. So the data was better than expected. The key number, I'm going to show that you can see that. There we are. The key number, the headline number here, non-farm payroll for June came in at 372,000. It was expected around 370,000. Last month's was 390,000. That's been reduced a tad to 380. Remember, April was 436,000. So that's a strong number, much stronger than expected. Nearly 100,000 more than expected. So strong number of people back in payrolls. Earnings on a monthly basis came in at 0.3%. We're in line with expectations, but that's pushed the annualized number up a tick to 5.1%. That's also hot. A number that doesn't get mentioned very often, but I look at all the time, is the U6 level. It's a much wider measure of unemployment in the United States than the main headline U3 level. So U6 has also come down quite significantly from 6.7% from 7.1% to 6.7%. So that's suggesting there's more people back in the marketplace as it gets tighter. Yeah, that's a tight number. That's keeping the Fed online, I would argue, my analysis of it, for a 75 basis points rise in a couple of weeks at the end of July, and possibly 50 basis points on. Yeah, well, we'll see how it goes into September. Obviously, nothing in August, the August holidays. So that's a strong non-farm payrolls, very, very confident. Conversely, the Canadian numbers, the unemployment rate is better than expected, quite significantly, but the employment was a big miss, came in as a negative 43,000 compared to an expected rise of 23,500, and it's much lower, obviously, than the 39,800 people were back in employment in Canada in May, and participation rate also fell as well. So yeah, we've got the calendar up here, guys. Just remember the weekend data is quite important as well. We've got inflation out of China on Saturday, so there could be some interesting starts to the Asian market on Monday if this gets a bit spiky one way or another. So don't be surprised we get some significant movements on Sunday night, Monday morning, as the markets open again. Some key Chinese data over the weekend. Okay, so I'll leave you. We'll quick final run through the charts here. Let's just see where we finish. There's no more questions. There's no more requests. What normally happens is I say I'm going to leave, and then lots of people start asking questions. There we are. That's exactly what's happened. Tomorrow's interesting. Indices, you have covered this, but there is an next support for euro and resistance for it. Right. Okay. Let's do this. So these questions are coming. Yeah, actually, Tumelo was the first. He starts talking about Tumelo, interesting indices. So let's have indices. The Nasdaq. Well, the most important one is the USA 500, the S&P 500. And it's been hit with a stronger dollar, so therefore stocks have come down. It's the 15-minute chart, right into its 200 period moving average here on the 50-minute here at 3,860, and we're under the key 3,900. Let me tell you the story of the S&P 500 here, as far as I see it. This week we've had a strong week, as I said earlier. We've been up and testing. And broke over the 20-day moving average early in the week on Tuesday. Wednesday we were high, and we had a strong day yesterday, closing over the psychological 3,900 level. It's not actually marked on here, but we closed above the 3,900 level yesterday on cash market. This is the futures market. So yeah, it's right on the 3. So that's a key level. The issue is, let me just zoom that in. No, zoom that in. Out, I meant. This is the daily, and we can see the 200-day is all the way up there, the 50-day is all the way up there, and the 20-day we're back over. Okay, so if we go up to the weekly, the key support on the weekly, this is a big support level, is down all the way down here at 3,500. So 3,500 is big support for the markets. There's lots of chatter that we've sold off enough now, is what some people are saying. You know, we've had these rallies as it's sold off, and rallies as it's sold off, but buying the dips, but we're still moving lower, aren't we? So here on that higher time frame, the weekly time frame, We've got support at 3,500 and resistance up here at 4,150 here. And if we look on the daily time frame, 4,175 is where the thing was stalling here. So this is 4,150, and it was just couldn't get over 4,175 at the beginning of June, and then we came back down under the 20-day moving average for all of most of June, and we've just crawled back over it this week. So if we close and hold 3,900 today, that'll be quite positive. But we've got a big resistance, as you can see there, on the daily time frame, where the top of the Bollinger Band and the 50-day moving average sits at around 3,950, 3,950. So that's the next big resistance. Most players will still perhaps be closed out some of their shorts, but you see the MACD the signal line starting to move up. So the signs of buyers on the daily basis. I'll put this. Can't really see that very well. So the signs of this might be a good, as this was very steep, the bear market bounce. This was very steep as well. This is a bit more of a sustained one. That was steep. Now over time from this June low to our current July high, this is a much more nice rise. The angle of rise is much better. So this is looking relatively positive. The caveat of all of this is that we've just completed the first week of July, which is typically quite strong. July can be quite good for equity markets, but we're getting into the holiday season thereafter, into August in particular. The other thing that's coming next week, most important driver, is the fact the second quarter earnings season starts next week with the big banks. JP Morgan report 13th or 14th, I think it is. So that's what markets are waiting for. Now, that could be the next catalyst to move this over 3,900. So again, that's what my particular view on the equity markets. So some good stuff, but that stronger dollar has weighed on equity markets traditionally, but this week they've sort of shook that off and started to move up. So, I was expecting perhaps a test of 3,700 again. It didn't come, and we're back to 3,900. So, but really the big break needs to be the 4,000, 4,100 level if we are going to start to move up significantly. First resistance comes at the 50-day moving average, as I said, at 3,950. Okay, so that's in equity markets, which we haven't talked about. Next, support for euro and resistance for USD. So let's do this in order. Again, I don't know what time frame you're talking about, Leon, but certainly on an end-day basis, it's got to be parity, hasn't it? We're down here at we're under 105. We're under 102 for the first time in 20-odd years. I think it was December 2020. We were down at 102, but 103.5 was a big support area as well. If we go to this, but this is the weekly. I'll zoom in. You can see it's going all the way back here. 105. This takes us 16. This is off the chart basically. This only goes back to 2014. If I could put the monthly chart on it, I'm not sure how that goes. But you can see we got much lower, not long after 84 here, but this is back in 1998, 1999, the currency crisis. Dollar was very, very strong. So yeah, parity is the next big line in the sand, 1 for 1, and that's 101, that black line. I haven't put one actual parity on here, have I? But yeah, again, I don't know what time frame you're saying. And you could argue the same. So that's support. 101 is the current support for euro. Then parity at 1 itself. Resistance for the Swiss franc. Where's Swiss franc gone? Where's my Swiss franc chart gone? There it is. Well, as I say, today resistance is here at 97.75 and then 97.96. You want to take a screenshot of that, Leona. That's an intraday. This is only on the 1 hour time frame. If we go up to and there's the support areas. So dollar's bid certainly. It just can't break over this level, this 97.75 level. On an end of day basis, similar, there's a levels we just talked about. It's bid, it's gone over the 50-day moving average yesterday. or today, in fact, not yesterday, ran into it yesterday, went over the 20-day moving average on Wednesday, and it's had it's a very strong set of candles, isn't it? That one, positive, positive, positive. So 1, 2, 3, 4, 5, 6 positive days for the euro, the Swiss franc, the dollar against the Swiss franc, and you can see it does this. It has a habit of doing this. So this is bid 97, 98, that line there, 97, 96, 6, that says that's an intraday high. So 97's the next line in sand, and that's parity for the Swissy all the way up there. So still obviously a long way to go from there, but let's have a look what that looks like. It's just caught my eye there from a Fibonacci point of view. Sorry, you can see those fib levels, can't you? Change the colours so you can see them. They come up. I can't see the colour levels. Oh, it's not working for some reason. That fib level, I can't show you the fib levels on there for some reason. But anyway, we're about over 50. So we're it's bid, it's strong bid resistance at 98 itself going forward. Right, there we go. Some more questions are coming. Timo, please talk about the Kiwi on the 4-hour time frame. So Kiwi on the 4-hour. Weekly is down, daily is down, and the 4-hour is down. Down by, I say, it's trending lower. It has done, for a while now. Here on the 4-hour, let's zoom it up, a bit more action. So we have resistance at the midline of the Bollinger Band at 61.65. Then big resistance on the 4-hour up there at 61.95. So 62 is a key resistance level. There's 62 itself right about there, and that's where the 50-hour and the 50 period moving average and the top of the Bollinger Band for the 4-hour chart sits for Kiwi. So that's key resistance zone. As you can see here, candle prices didn't actually get there, so that's our key resistance area. And I don't know how the others do this. Objects, shape, rectangle. So that's a key sort of resistance zone through there. So in there, that's a resistance we need to break, and the support is down here, is through here. So that's a sort of support area. So that's the range we're in on the 4-hour. Technically, we're under the moon. We've bounced a wee bit from this support zone here at 61.35, but resistance sits there at 62. So it's longer term. Obviously, the trend is down. The highs are getting lower. The lows are getting lower, and we've flattened out here. So we need to break through this low area here, which sits at 61.30, right in the middle of that zone, if you like. So 61.30 is your support area. Resistance sits there at 61.90, or call it 62. So that's, and we're biased to the downside, although at the moment we're trying to move up. So biased downside, but we've got a strong current candle, which has just started. It's only half an hour into it. So we've had 3 consecutive down candles and a bounce up resistance. So we need to break on the close of the candle in 3.5 hours time. We need to be above this midline in the Bollinger Band to see if it's going to go to test 62. If not, we're biased back into 61.30 in the lower half to the downside. Amazed, you must have just joined us. We talked about the euro loads. The euro remains weak. This is the weekly, and this chart is to the downside. This is the daily chart. Zoom up, We've recovered our big spike under 101. I don't know what time frame you're trading, but the 1 hour daily is down, as you can see that very clearly. The 4 hour, I'm not going to throw all the data, but you can see that's low. Needs to break over the midline of the Bollinger Band there at 101.97, so call it 102. Certainly I'll call it 102 because that's where the resistance is. You can see that on the 4 hour. And the 1 hour is being down and it's still weak. It's sort of testing the 20-hour moving average. It's sort of moving up over there. That's 101.54. Next resistance on the 1 hour is 101.75. And then the top of the Bollinger Band there at 101.90. So 102, very much a line in the sand for euro. But the bias is the downside. We've had a move down ahead of farm payroll. We've come up. We've had a bit of a shakeout, and now the euro's back into bid as we come to the open of the US cash session. So they're the key levels to look forward to: 101.75, 101.90, and that will take us to 102 to the upside. Our support is a spike lower and the bottom of the Bollinger Band at 101.13. Amaze, my friend. Can't. Only gold. What do you mean only gold? I'm not quite sure what you mean, my friend. Leona was asking about Swissy. Yeah. Did I do the hour? I think I did the hours, Leona, didn't I? If not, if Leona, ask me again if I didn't answer your question properly. I can't remember if I did the hour chart. Gold can't. I'll keep to the gold chart. Daily is weak. There we go. Big sell-off here, as I said earlier in the session on the 13th of June. Retrace for a couple of days, but we've been under the 20. Can't really see that there, can you? We've been under the 20-day moving average, the underside of the Bollinger Band from that 2-day rally for, well, we're into what is it, the 15th day now, 15th trading day to the downside. Bit of support being found here at 1740, but the big support is at 1725. That for me is still moving down. Two stalls here at 1740, but following two big down days. That's not unsurprising. So that's biased lower on the daily. It's biased lower on the 4 hour, though it's consolidating here on the 4 hour. So the 4 hour, if it's going to break up, needs to break the midline there on the Bollinger Band at 1751, and then the top of the Bollinger Band there at 1780. So I think I said all this earlier, didn't I? Yeah, I'm sure I have. And the 1 hour continues to consolidate sideways. That's not doing anything. It's a trend following trade. That's just really boring and waiting to do something, and it's not. An end of hour basis, the 50 hour is positive. Well, not really. There's a 20 hour at 1740. The 50 hour is at 1743, and the top of the Bollinger Band sits at 1745. So those levels need to be broken if it's going to move up. If we're going to move down for the rest of the day, we need to close under 1736 and then start to move down, but it doesn't seem to want to do that either, does it? MACD sort of edging higher, RSI is 49, so it's neutral, not doing anything. And percentage R, which I put on earlier, has been oversold. It's come up, but nothing's really moving that on the gold chart. Leona, did I answer your questions on the 1 hour chart? Talk to me. What were you asking about? You were asking about euro and Swissy. So let's just do the euro. So euro, you were asking next support on the 1 hour. Well, the support was found, wasn't it? The support there is 101.15 from earlier on today, and it's then it's this. If this hour, which is just sort of half an hour in, if we break over this, then that support then comes up to 101.15.20 or 101.15.18, but it then needs to break over 101.70, and then the top of the Bollinger Band at 101.95 to the upside, and so that's support for euro and resistance for the USD on the Swissy on the 1 hour is those we talked about before. So hopefully I did answer those. Yes, good. I thought I had. Hey, Jesus says thank you. Right, okay. I am going to go now. I've been on for over an hour. Let's just have a look at the US Open, where the markets have opened. Cash markets are just opening. They look a bit weak on the back of non-farm. Well, yeah, there will be. The futures are down on the back of non-farm payroll. This is the So this is the last hour here. This is the S&P 500 down, big down. It's bounced off a wee bit, but they're going to open lower, or they are opening lower. There's the Nasdaq, and a lot of you trade the Nasdaq. Tech heavy had a good day yesterday, very good day yesterday. 2.75%. I think it closed up yesterday, didn't it, the Nasdaq? The S&P was up 1.5%, and the Nasdaq was up 2.85%. Oh, it's a yield, wasn't it? I thought I had a note down here, but perhaps I haven't written it down. Yeah, some big moves yesterday, especially GameStop holders. I don't know if you hold GameStop, but said they would do a 4-for-1 stock split. We were up 15% yesterday. Anyway, Nasdaq also hit by the stronger non-farm payroll, stronger dollar. So it was down here futures, and it's opening lower by the looks of things as the cash market starts to open. Sorry, I'm a bit delayed here. Yeah, so we've had 4 days up, so a bit of a down open for US stocks. So I'm going to call it a day, guys. I hope you've had a good session. I certainly have. It's been strong data for payrolls. It keeps the Fed's toes, keeps the Fed on this rate hike cycle. 75 basis points, more or less nailed on, one would argue. So there we go. Hope you're all well. Have a great weekend. Trade safely. Take care, and may the pips be with you. And we'll see you all again next time. All the very best, everyone. Bye bye.